So we're going to take a look at profitability ratios that you're going to see in the exam now. So you're going to be talking in part B anyway about these three, which are return on capital employed, which uses the operating profit figure, and this finds out the profit generated as a percentage of capital invested in the company. So how much profit is the company making based on the money that is invested? And the formula is operating profit multiplied by 100 over capital employed. So we'll take a look in a second about what operating profit is. And obviously we want the return on capital employed to be higher than last year, higher than return on risk-free investments of 1 to 2%, higher than preference share rate, whatever that might be, higher than the dividends, higher than the debentures that we have as well. The next one we're going to look at is return on shareholders funds, which is also called return on equity funds, and they find out a company's return to its ordinary shareholders. They find out the profit generated as a percentage of equity capital invested in the company. And the formula for that is our profit after figure. So operating profit minus interest, minus tax, minus pref divs multiplied by 100 over the shareholders funds. And what are the shareholders funds? They are the ordinary shares, okay? And then the reserves. Reserves is another fancy word for P&L balance, okay? Retained profits, whatever it might be. So reserves is just your profits. And again, we want it to be higher than last year, higher than the return on risk-free investments, 1 to 2%, etc. And then we have earnings per share, and that answer comes in cent, and it measures the earnings of each ordinary share in cent. And the formula is our profit after figure, so operating profit minus interest, minus tax, minus pref dividends over the number of ordinary shares. And again, we want it to be higher than last year. So we're going to take a look now at what type of stuff do we need to be writing in part B for the return on capital employed. So what is it this year? What was it last year? What's it projected to be next year? So you're either going to get a question, what was it last year, or projected figures for next year. Is it a positive or negative trend? Is the business profitable? Is the ROCE above the return on risk-free investments of 1 to 2%? Is it above the cost of borrowing, the debenture rate of whatever percent it was? Is it above the preference share capital rate of whatever percent? Is the business making more efficient use of resources this year than it was last year? Based on the trend, can the business repay their debentures in whatever year they need to be repaid? And that you'll find that information down in the finance by in the balance sheet. Okay, so I'm going to do the first 3 or 4 of these, and then I'm going to be quiet, and then you guys can attempt them then yourselves then back as far as the 2010 question. So return on capital employed. Formula is operating profit over capital employed multiplied by 100, and that gives us our answer. So here we need to find the operating profit. Operating profit would be the figure that we would have here after the operating expenses have been taken away, okay? So it is our net profit that we have here, but before any interest is paid. So our operating profit figure is our profit figure before any interest, tax, all the rest has been taken away, okay? So it's going to be 39 plus 20 over 621,000 multiplied by 100, and that is 9.5%. Now, last year's was 9.07, and that then is a positive trend. So it's just jumped up by 0.43. So that is really good. So we're happy about that. That's above the rate of the debentures. It's above the rate of the preference shares. It's above the return on capital employed from last year. So everybody be happy with that. Okay, 2020 Robinson PLC. So again, the formula for return on capital employed is operating profit over capital employed multiplied by 100. So how do we get the operating profit? So it is our net profit 104 plus 16 will be our operating profit, because our operating profit is our profit figure before any interest, tax, preference dividends have been taken away. So 104 plus 16 over my 1182. Multiply that by 100 and we get 10.15. Now, if I look at my return on capital employed from last year, it was 908. So that's really good trend. That's positive there. So it's increased. now it's not a lot, but 0.17. But again, it's above the preference share rate, it's again above the debenture rate, it's above last year's. They're making more efficient use of resources. Everyone's happy. Right, 2019 operating profit figure. Our formula is operating profit over capital employed multiplied by 100. So I go over here to my trading profit and loss, and I have net profit 90,000 plus 15,000. So that is 105,000 is my operating profit, and that is over 1087. Multiply that by 100 and we get 9.66. And then I compare that to the return on capital employed of 5.8, and that was then an increase of, quite a few. That was pretty good, 3.6 or 3.86. Yeah, so really good. So that's a positive trend. Now 9.66, it's still above the rate of debentures, rate of preference shares, and better than last year. Everyone's happy there. Okay, so from this point on, I'm just going to be quiet. I'm going to let you calculate a few yourselves, and then I'm just going to show you the answers. So just pause and play the video as you please. Okay, so that's all the return on capital employed questions done. Now we'll look at the return on shareholders' funds. So the return on shareholders' funds is basically the same as the return on capital employed, but we're only looking at the shareholders' funds. Okay, so the shareholders' funds are the ordinary shares, and it is the profit and loss balance as well. So that's all we're going to be taking a look at here. What is the return on the money that the shareholders have put into the business? Okay, so we're taking a look The formula, return on shareholders funds or return on equity funds, is my profit after figure. So that is profit after interest, after tax, after preference dividends, and that's over ordinary shares and the reserves or P&L balance or whatever it's called down here. So the retained profits, whatever it might be. So 200,000 and 71,000. Okay, so it's the two items without the percentage in front of it. So the items with the percentage in front of it, they are your debt capital, okay, because you've borrowed these, right? But ordinary shares and profit and loss balance, they are your shareholders' funds. Okay, so we want to get the profit after figure. So if we take a look, this profit figure here, 39, already has interest taken away from it. There's no tax in this question, but there is dividends here. Now, these dividends include ordinary dividends and preference dividends, but we need to take away the pref dividends from this 13,000, right? We need to take that away then from the 39,000. So how much are my preference dividends? So 100,000 multiplied by 9% is 9,000. So from my 39,000, I'm going to take away 9,000. Okay, and then I'll put that over 200,000 plus my 71,000, and I'll multiply that by 100. So I'll have 30,000 over 271,000 multiplied by 100 is 11.07%. Okay, and so we don't know what it was last year. They don't often tell us here, but they might sometime, but they just haven't in the past. But have a look out for that in case they do. And the trend, so we can't do the trend. Now, this came up a couple of times, you know, in the part A, and they hadn't come up for years. This is a very important one to practice. Okay, so 2020 then, Robinson PLC. Again, my formula is the profit after. So profit after interest and tax and preference dividends over my ordinary shares and my P&L balance or my retained earnings or my reserves or whatever I want to call it. So I go to my profit. My profit figure here is 104, and there's dividends still to be taken away from that, okay? So what I need to do is I need to find out what my preference shares are. Okay, so interest has been taken away from that 104 figure, so I don't have to take that away. There's no tax in this question. All I need to find out is what are my preference dividends and take them away from the 104, and that is my profit after figure. So 200,000 multiplied by 6% is 12,000 euro. So I'm going to have 104 minus 12, okay, and then that's going to be over the ordinary shares, which is 460, and the P&L, which is 122. So 460 plus 122. I'll multiply that by 100 and I get 15.81%. Now, I can't compare that to last year because I don't have the information, so I don't know what the trend is. But look, that's pretty good. It's over the return risk-free investments. It's over the preference shares, the debentures, everything, you know. So that is looking good. All right, so 2019, Shannon PLC. So again, the formula, profit minus interest minus tax minus pref divs over ordinary shares and P&L balance. So I go up here, I look for my profit figure, already has the interest taken away. So 90,000, I need to minus whatever, so 90,000 minus what my pref divs are. So 250,000 multiplied by 8% is 20,000. So 90,000 minus 20,000, and that is over 500,000 plus 87,000. Okay, and then I'll multiply that by 100. So 70,000 over 587 is 11.93%. And then I can't compare to last year because I don't have figures for last year, so don't know what the trend is there, but 11.93 is great. It's well above the return on risk-free investments, it's well above the rated debentures of 6% and well above the preference shares at 8%. Okay, so I'm going to get you guys to practice a few. Again, I'm going to be quiet and you can just pause and play the video as you please. Now, in this question, that should actually say next year. Okay, so this should say next year because this is projected for next year. So that there should say next year. Okay, so that's all the return on shareholders' funds, aka equity funds, done. So very, very, very important one. As I said, it started to come up in part A, and we've seen it in a couple of marking schemes as well. So we never know when they're going to want you to include that in part B. So next, we're going to take a look at earnings per share. So the third formula that we might see in the marking schemes. Okay, so earnings per share tells us how much each ordinary share has earned. Okay, what are the profits, what are the earnings of each ordinary share? Okay, so formula for this, we're going to use the profit after figure, because as you know, the only two formulas that use the operating profit figure are ROCE and interest cover. So every other profit figure is going to be the profit after figure. So profit after interest, after tax, after preference dividends, over the number of ordinary shares, which is 200,000, multiplied by 100, and that's what our answer is. So we have profits here, 39,000. So 39,000 already has the interest taken away. There's no tax in this question, but what we have to do is take away the preference dividends. So 39,000 minus my preference dividends, which are 100,000 by 9%, which is 9,000. So 39 minus 9 over the number of ordinary shares, which in this question is 200,000. Multiply that by 100 and we get 15 cents. Now we look at last year, earnings per share, we got 16. So that is definitely an improvement, or sorry, it's not an improvement, it's decreased slightly. So last year was 16, this year is 15, so that is a negative trend. Okay, because we want it to be higher than last year. Right, 2020. So let's take a look. So again, our formula, profit after figure, profit after interest, tax and preferred dividends over the number of ordinary shares. So this profit figure here, 104, already has interest taken away from it. But we need to find what are the preference dividends. So preference dividends, 200,000 by 6% is 12,000. So 104 minus 12 divided by the number of ordinary shares, which is 460, multiply it by 100 and we get 20 cents. We compare that to last year's 18.5 and that is an improvement. So that is a positive trend. Happy days. Right, 2019, again, my formula, profit minus interest minus tax minus pref divs over the number of ordinary shares. So profit here is 90,000, minus interest is 15,000. Okay, so 90,000 has already had the 15 taken away from it. Okay, so this 90 has my interest taken away. There's no tax in this question. I need to find out how much are my preference dividends. So that's 250 by 8%. That's 20,000 euro. So we're going to have 90,000 euro minus your pref dividends of 20,000 euro. And that's divided by the number of ordinary shares, 500,000. So multiply that by 100 then and we get 14 cents. So compare that then to last year's 10 cent, and that is a fantastic positive trend there of it's increased by 4 cents. Happy days. Okay, so I'm going to be quiet now and let you guys attempt a few and then I'll just work through it. Again, just pause and stop the video as you please. Okay, so that's all of the earnings per share done as well there. So we had a look at profitability ratios, the ROCE, return on capital employed. We had a look at return on shareholders funds, also known as return on equity funds, and then lastly we had a look at earnings per share. So they're the three formulas that you'll need to know for part B under profitability.